Good afternoon, everyone. Sorry for the delay in our starting. We've had a few technical issues, but I think we can get underway. And it's my pleasure to introduce you to Ash Evans, who is the Managing Director of AAA Financial Services. And Ash is a ex-bank manager, and he's going to talk to you today about financing your business to achieve success. How are you today, Ash?
Yeah, very good. Thanks, Peter. Thanks for the invitation along today.
Okay, so thanks for being with us. So if you want to now bring up your PowerPoint slides, or way you can go. Thanks.
Thanks, Pete. Just doing that now.
And just take them to the slideshow. Thanks. Okay, you're right. Thank you.
Is that up there now, Pete?
Oh, no, the slideshow hasn't come up properly, but maybe you're going to have to. I think you just go with that, what you got there. Thanks, mate.
Is that up there
Yeah,
now?
it's up there. It's up there, yeah.
Oh, beg your pardon. Okay, thank you. Yeah, look, thanks again, Pete, for the invitation. I'll just step through the respective slides here that I've done. So we've been a finance broker for 19 years. There's about 8 or 9 of us in the business as ex-bank managers, covering everything from personal loans, home loans, business loans, rural loans and equipment finance. Largely North Queensland, but we have got clients in Central Queensland and people that have emerged across Australia. This is our premises here at Walcott Street in Garbett, probably 10 minutes from the centre of Townsville. Who we are, we started in 2001, myself and Paul both worked in the National Bank many years ago. And basically just a little history there about why we started the business, etc. A couple of photos. Obviously you can see a few grey hairs there with the people that's involved in the business. And then more recently, over the last 12 to 18 months, we've been working on a consulting arm of the business, and these are the team in the consulting arm of the business here. What I just thought I'd start off with, there's probably 2 parts to the presentation today. I just thought I would touch on the first section of it. I'll just touch on a few pain points, I suppose, that we see in businesses. And I've selected 3 different topics, I suppose, that are probably fairly relevant through the coronavirus at the moment. So I'll just try to step through these slides reasonably quickly. The second part to the presentation will be more along in the lines of the finance, the lending side of things, and steps that or levers that I believe you can look at and consider and have them pre-arranged in case that you may need to use those as we progress through the pandemic, I suppose. So look, the first one here is first pain point is financial pressures. So obviously the audience today was going to be small businesses, small to medium businesses. So we're a small business as everybody else is here, and obviously the issues that we face, they can be obviously financial pressures. They can it can be disasters, floods, just change in lending policies, a whole range of different things that can have an impact on these issues. So again, there's a lot of topics here, a lot of things, help with your finances and debt. Are you having, or you're seeing late payment of bills, not only in your own business but perhaps even your debtors in your business. Obviously in times like this, your clients will start trying to stretch out, payments and perhaps use other businesses as their banks. Spending less money, increasing debt on loans or credit cards, legal action, etc. there. So there's a range of different topics there. Next one down here is where are we? signs that, so part of this, how can we help, how can we go about helping those issues, I suppose, those stresses that we see on businesses. And one of the topics, if people did want to go to our consulting website, there's a lot more detail in there. That's www.aaaconsulting.com.au, but I've just selected a few topics here. So business resilience, you know, obviously quite critical, and I think really this all comes down to planning, prior planning. So again, businesses can face risks in economic, physical, political. Obviously, we're seeing that at the moment with the issues with our trading partner in China. Technology, obviously, with the pandemic, there's a lot more reliance on what we're doing today, Zoom meetings, etc. So look, there's a lot of challenges, and again, it's having a continuity plan and a resilience plan during these issues. Obviously, up here in Townsville, over the last couple of years, we've had some fairly major floods, and obviously down south in New South Wales, Victoria, South Australia, they've had the bushfires. So again, large parts of the country have been through similar sort of things to this. So again, throughout the resilience planning process, you can plan for different scenarios and know what you do when situations arise. So that will really take out a lot of the anxiety, a lot of the stress out of those. Don't get me wrong, it's not going to reduce it completely or erode it completely, but it will help. And you can clearly respond to those situations in a clearly and well thought out manner. In developing the resilience strategy, you should assess the potential risks in your business, the likelihood of consequences, ways that you can manage those risks, identify critical business functions and how your business can respond, resources required to perform those business activities, impacts, and perhaps even if you choose not to perform them, develop steps to recover critical business functions and on different risk scenarios. Note that prevention is the best way to protect. So again, it's just being proactive. Keep your work environment and equipment well maintained. Background check staff, staff training, that's a huge issue. Obviously, through times like this, we've all invested a lot of time into our staff, and if you can manage to retain those staff as best as possible, I know there's a lot of financial pressures there, but if you can use some of those levers like JobKeeper, etc., I think our businesses on the other side of this will be a lot better for it. Backing up your electronic data, probably never more important than ever than ever previously. Obviously, cyber security is very important these days with a lot of people working from home. Perhaps the internet securities perhaps may not be as strong in the home environment as to what their business premises are. So just a number of different things there to consider. The next one here is benchmarking. Again, this is just, it sort of dovetails into the business planning, but we've actually used, with the consulting business being launched probably about 6 weeks ago, we've actually done a number of scenarios where this was the first step that we actually looked at for clients. So we actually put the financials that we've received from those clients through what we would call the washing machine, if you like, the filter. And so what you can do, again, we've a subscription model with a benchmarking firm around Australia, and we've had mechanics, fabricators, cattle graziers, etc., that we've actually put their financials through this, and it can very quickly identify. I can relate to one mechanic recently. They've only been operating for 12 months, but it really identified probably 4 or 5 key things that they need to look at. One was their cost of goods sold, one was their rent, and perhaps wages was another one. Again, you've just got to consider those things when you're looking at it. Obviously, these people have only been operating for 12 months. I think their, the turnover was probably 25% down as against to existing businesses, but that's to be understood and understandable given that they've only been trading for 12 months. But in the next year or two, they will certainly hope to hit those targets and probably overachieve. So again, look, it's just it's not all things to everybody, but it does highlight some key points to have a look at. So I'd really encourage people to be active, and again, active with the benchmarking. It's not just a case, what we're doing in our consulting business is we're actually offering people to do that at least on an annual basis. It's not sort of, as a business plan, it's not set and forget. It's something that, you know, with the benchmarking, as they grow and develop and put more staff on, etc., it's something that we're going to have a look at on a regular basis. Again, some of the key performance indicators to look at: productivity indicators, business profitability, plant and equipment, return on investment, cash flow planning. So as a result of this, this particular client, when we did the benchmarking, it actually, we then actually rolled that into doing 2 years worth of cash flows. And it was actually looking at their hourly rate as well, comparing benchmarking to other like-minded industries around Australia. It actually indicated that they were probably $10 an hour less than perhaps what the industry standard is. So I know that's a sensitive issue and they've got to, you know, handle that, but we have built that into their cash flows. Again, so that's that would be just something I'd look at too. Another pain point here is work-related stress. I won't go through every single item here again. You can see that up on your screens, but obviously it's not, stress isn't an illness in its own right, but times like this, there's absolutely no doubt. All of us in business, you know, we've got staff to look after, we've got our own families, and we've got our businesses that provide for all of those people. So I'd hazard a guess that there'd be very few people running a business or a small business today that hasn't seen an increase in stress and anxiety. So very, very important for all of us, even employees and other people, family members, just to keep an eye on each other. But some of the typical physical symptoms are going to be fatigue, you know, tension, headaches, you know, perhaps heart issues, sleeping difficulties, you know, upset tummies, all those sorts of things. Other issues: depression, anxiety, discouragement, irritability, pessimism, so just being, I guess, a bit down, feelings of being overwhelmed, etc. You can see a number of them out there. Also, you know, aggression, drop in work performance, problems with relationships, mood swings, etc. So just very important. Again, this photo that you can see up here, I think says it all. That's obviously a farmer or grazier, and just out in the field there. And I thought that was fairly apt for this slide. So, you know, not a lot of people, there's a number of people that won't sort of share their concerns and that. But again, what I would just stress, pardon the pun there, but what I'd just perhaps highlight is that, again, it won't resolve all the issues, but resilient planning, business planning, and doing some cash flow projections, all of those things that I guess a good, efficient business can and should do. In times like this, it is just so important, because if you've planned for some of these issues, you probably won't cover all of the issues, but if you plan for a lot of them, it does reduce your stress. There's no doubt about that. So, yeah. Other causes of stress can typically be working long hours, heavy workloads, changes in the organisation. That could be staff related. You've got to let some staff go, etc. Tight deadlines, changes to duties, job insecurity. You know, again, a lot of these issues are very relevant in this COVID-19 world that we live in at the moment. So I'll just keep stepping through those at the moment, and I guess there's a couple of pain points I've talked about. How can we help? And I've touched on this a little bit, but business planning. So planning will alleviate or reduce your anxiety and stress in the moments of financial pressure, natural disasters and pandemics. Sound strategic direction and business analysts provided through a business plan. Present clear goals and objectives with direction on how they will be achieved. Concentrate efforts and investment on important business decisions. Will reveal whether or not it's possible to meet future needs and goals. So there's a lot of things that go into a business plan, and it's not something you can do in a few hours or a few days. This can be developed over a number of weeks, involving all of your stakeholders. I think it's very important to have a good team of advisors around you, your accountant, consultant, lender, broker, solicitor, financial planner. They would be the people that you need to lean on and use their knowledge and skills and experience through times like this. Again, as I've said previously, a business plan, please, one thing I'd stress to you through this is don't just prepare a business plan and put it in the top drawer and let it have dust settle on it. It needs to be a living and breathing document, because the agility and your future direction of your business, there's a lot of challenges, whether they're political or government regulations, their stock issues, your suppliers, all those sorts of things. They're going to change on a regular basis. So, I just recommend to review your business plan, perhaps at least on a quarterly basis, just to update it. It can assist in negotiating finance and competitive rates, provides goals and directions for the manager to help achieve improvement in profitability and the business, etc. there. So a range of different, builds the confidence to consider new options, predict and plan in more difficult periods. These are just the list. The next one here, the next pain point here, I'll just try to zip through a couple of these reasonably quickly now, but the internal business risk is another pain point, and there's a number of subtitles which I'll go through here, but these are things that, again, that need to be considered and also to be aware of and address them within a business plan. So obviously business risk is a growing concern, especially in today's economy. Business owners need to take control of their companies and assess the risks inherent in both their firms and industries and determine how best to reduce these risks. Risk can be self-related, financial or operational. However, for each potential risk, an effective system of internal controls can be implemented to reduce those risks. Just step through those. So stability, the ability of business to manage its finances, to meet its debt obligations, return capital to its investors, etc., or the partners in the business. A business which is financially stable can grow its profits and more easily than one which is not. Furthermore, investors, lenders, employees are more willing to engage and invest in a financially stable company. In addition, management stability, branding stability contribute to the overall impression of a business being sound and stable. I think we've all seen, whether they're corporates or small businesses, if there's a lot of staff turnover, the staff aren't happy, all those sorts of things. If they're attending events and then all of a sudden they're not there for the next year or two, it's all about stability and consistency, I suppose, of approach. So very, very important in this time. And I guess again, in this time of uncertainty, I think it's important to communicate with your clients as best as possible. Let them know how you're trading, whether you're a restaurant, coffee shop, a mechanic, a motel, whoever you might be. It's very important to communicate, and obviously technology is a wonderful way of doing that more so these days. Again, having enough financial and human resources is crucial. I'll touch on that in the later part of this, but having working capital, using some of the government stimulus and grants that are available. I think any sort of assistance and levers that you can reach out and perhaps have in your tool bag or toolkit to use. You may not need them, but it's good to be ahead of the curve and have those things in place as best as you can. They will, or potentially can, help in that human resources. Again, I've touched on it, but you know, if you're having to let your staff go, I mean, that the years of staff training and money that you've invested in that can be eroded and reduced. And so when you do come through this, it's going to incur a lot more cost and time to train up new staff. So it's just very worthy of considering having some resources up your sleeve to maintain those the staff. Resources, innovation. I think we've touched on resources pretty well. Innovation, just again, I talk about innovation myself a fair bit in our consulting business and finance, and looking at new ways of doing things, looking at you know, more effective ways to communicate. Obviously, through this, we haven't been able to, perhaps when we've been locked down, how do we still reach out and talk to our clients? And I know in our business, obviously, we're reasonably lucky where we can. We have worked from home, a number of us, but a large part of us have worked from home. We've returned, most of us have returned this week, but you know, having your technology, having your printers, having your systems set up that you can work from home. I realise not every business can do that, but just having that resilient plan and innovation. How can we, you know, obviously some of the restaurants and coffee shops are doing deliveries and takeaways. They've had to remodel their business. So yeah, look, it's whilst it's a tough time, it's also interesting watching people innovate and just it'll be interesting to see how those innovations have actually, how many of those actually continue on too, that might actually improve how the business have operated previously. Credit risk, obviously credit's the lifeblood of any business. So, you know, your sales terms, you know, can you negotiate better terms with your suppliers? Those sort of things and these sort of things. Obviously, we're going to get stretched a little bit on our own clients, etc. Obviously, debtors may fail or slow down in their repayments. Natural disasters, I touched on that earlier too, but you know, many of us around the country have had floods or storms, bushfires, droughts. Pandemic, obviously that was fairly apt at the moment. Human influenza, swine flu, bird flu, with obviously coronavirus now. Legal issues such as insurance, resolving disputes, contractual breaches, etc., non-compliance. Obviously, I'd probably throw in there the rental issues that are perhaps going to surface, I think, over the coming months. Technology, you know, what happens if our computer networks fail? What sort of backups, cyber security, those sort of things. Are we using outdated equipment? Can we get some you know, updated equipment to improve our experience? Regulations and government policies, water restrictions, quarantine restrictions, carbon emissions restrictions and tax. Obviously, we've got the border restrictions, all those sort of things thrown in on the top of that. Workplace health and safety, obviously accidents caused by materials, equipment or location. Property and equipment, etc. You know, damage from natural disasters, burst water pipes. We actually had one of those here in our office here about June last year. A tap failed and our business was out of action. We had to work in our warehouse. Lucky enough it was cooler up here at that time, but so these things do happen. So a few more things there: security, supplies, utilities. You know, the greatest thing about internal factors is you do have control over most of them. So the changing internal factors often involves indirect costs. Some of the factors as a result of the way you run your business and result for your decision making. So again, these are the areas that we can certainly help you in, along with your team of advisors. I've just put a little list up here. Again, I'd encourage you, it doesn't come out very well on the slide here, but I would encourage you, if you are interested, to have a look at that website again. I'll put it up on the last slide, but AAAconsulting.com.au. But this is just a list with our business consulting. We are doing rural consulting and we also are doing household consulting. So there's just a little bit of a taste of, I suppose, some of the things that we're including in our rural consulting, in our business consulting, I beg your pardon. So there's a number of topics. The three sort of things I touched on this morning I thought were probably the more relevant ones. But you can see a list up there, everything from newsletters, resource libraries, and academy. So we've got a range of, we've teamed up with an online training company. It's an international and national training company. Everything from inductions, workplace health and safety, first aid. There's a whole range of different topics there, videos where you probably typically around half an hour, you go through and watch the video, you were asked a range of different questions, and then if you answer them and you get enough right out of the number, you actually get a certificate and get signed off. So again, I haven't got, I guess, enough time to run through all this today, but that's a very efficient way to do it electronically, particularly for rural people and business people. We just haven't got time to do all of the training that's required with our businesses today. So I'll just step through that. So what I'd like to do now, Pete, if it's okay, I've sort of gone through that first part of it. These top 10 tips is probably more to do with the lending and the finance side, and probably other levers and other government packages that I think that we should certainly strongly consider as a small business. So if I can, it's okay, Pete, if I keep stepping through this?
That's all right. Yeah.
Thank you. So the top 10 tips that we've put here, perhaps in no particular order, but the number one, cash is king, and I probably would put that at the top if I had a choice. So it is a cliche, but at no time has it been more appropriate. So controlling your cash flow at this time is absolutely paramount. Try to come to terms with your suppliers. I know, the audience today is going to be a myriad and a very varied industry base, of course. But try to come to terms with your suppliers. See if you can get any relief. Instead of perhaps paying in 14 days, can you get 30 days? Or instead of 30 days, can you get 45 days or something? Just see if you can get some relief from your suppliers where possible and appropriate. Defer repayments. Obviously that could be by arrangement with your suppliers, or also with your lenders. If there are some loans in place, perhaps even ATO, those other sort of commitments. Reduce staff hours, again, where appropriate. I mean, if we don't need to, obviously, the business is going well, of course you wouldn't, but again, reducing hours is probably more palatable, more attractive than actually getting rid of staff members. Again, if everybody can take a haircut, whether it's 20%, 10%, 30%, it will all help. Talk to your staff about wage reductions and whatever it takes, but don't leave it too long. That's just something from experience. Obviously, most of us have been through GFCs and other natural disasters, and I'd certainly encourage people to act. I know us as a business ourselves, we probably 10 years ago now, but with the GFC, we probably didn't act until about 12 to 18 months down the track, and it did impact on us. So, number two, deferral of payments can be a very useful tool. Most banks are being reasonably accommodating with at least 3 months, but mostly 6 months deferments without any real dramas. And there's a range of different procedures, and we, as a finance broker, we're more than happy to help anybody through that process. It ranges from probably the Commonwealth Bank, who had the technology to actually simply turn off everybody's repayments. You didn't actually have to opt in or apply. They basically turned everybody's repayments off for 6 months. If you didn't want that, you had to actually reach out to them and tell them. To other lenders where it was a little bit more paperwork, I suppose, and a number of lenders in between where it could have been just a phone call. So again, most of them have got hotlines and special teams set up there. So that's largely working quite well, I think. Number three, and this is where I'm sure Pete will touch on, but having all of your information up to date. Make sure your 2019 financials are done. Being where we are today in May, I think they need to be done by the 15th anyway. But that's just really important, and get your year-to-date MYOB QuickBooks Xero figures correct, including your age debtors and creditors, and prepare a personal statement of position. Potentially even take a step further, ideally a bit of a hint or a tip. Every business should also keep an equipment schedule so they know where they're at with their repayments on those different items. It should have typically equipment type, description, bank finance, contract number, monthly repayments, and approximate owing. If you've got those, why we're sort of saying that to people, it's about having your up-to-date and current information. I mean, if you don't know who your bank are with with a vehicle or a ute or a forklift, it's hard to go about and seeking those deferments. But more importantly, with a lot of these government, if you're after some government assistance or you're after some bank assistance, they are asking for all of this information in most cases. So again, you can't, we have had some clients come in and, or some new people as well, where they haven't had, their financials done for 2 or 3 years. It's just not going to wash because you don't know the position, I suppose. So number 4, the instant asset write-off. Obviously, the government have increased that to $150,000, so you can purchase a vehicle this year and write the whole thing off against this year's income. So it is a very useful tool to reduce tax if you're fortunate to be in that position, of course. So again, we'd recommend you to talk to your accountant for those details. Queensland Rural and Industry Development Authority, a short name QRIDA. This loan has been largely to assist with wage cost primarily, and is limited to 50% of the annual wage expense to a maximum of $250. It is also primarily used for wage assistance and helping with rents, rates and buying goods, consumables, etc. Refinancing of other debts or buying equipment is not permitted under this facility. Now, this is a fantastic facility. It's probably the best one that's out there by any government. It's a state government one. Now, there was initially 500 million, and I did a division by 250, and I think it was only going to cater for 2,000 businesses. And sure enough, it ran out within a few weeks. But I'm pleased to announce or let people know today, I think it was on Friday or Saturday, that the state government actually doubled that amount of funding. So there's another 500 million on the table, which is great. So it was certainly oversubscribed. It's up to 250. It's an interest rate of 2.5%, so a very attractive rate. Basically, for the first 12 months, there's no interest or repayments for the first 12 months. Then it's interest only for the next 2 years if you choose, and then in total it has to be repaid over that 10-year term. Up to 100,000, there's no security. From 100,000 to 250, they are asking for a GSA, which is a general security agreement. It's like a mortgage or a fixed inflating charge over your business. So that's what they're generally asking for there. Number 6, the federal government guaranteed loan. This one, look, whilst it's handy and it's good, it's certainly not as attractive as the state government one, I guess, for Queensland, if I can say. So again, this is 250. It can only be used for working capital, again, not for purchasing assets, etc. The bank is guaranteed to half the loan by the federal government. And they do the rest effectively unsecured, except for directors' guarantees. It is very handy, but yeah, as I said, not in our opinion, not as good as a QRIDA loan. It is only a 3-year term. The interest rates, it is being assessed by the banks, and generally we're finding the interest rates typically are about 4.5%. There's no establishment fee or monthly fee, but it has to be paid off over the 3 years. The first 6 months is no interest and no repayments, I understand, and it's got to be repaid back over the remaining 2.5 years. So it is good. I'm typically finding that because the banks are the one that are handling that, they're probably been, if I can say, probably tougher on than what we're seeing on QRider and that sort of thing. So just bear that in mind. They're not just giving the money away. Again, you need to have all your information up to date. Number 7, talk to your bank or broker. Let them know what's happening. If you're closing the doors, let us know. Obviously, whatever it will be in the long run, best for you. There is. I just encourage you to keep those. I mean, we are trying to, as a broker, reach out to as many clients as we can. But if you just want another person to talk to, there are a number of things we can do with restructuring loans and those sort of things. So I would encourage you, instead of, I know it's very easy in these sort of circumstances to, with the stress and anxiety, those sort of things, is just to bury your head there and in the sand and hope it'll go away. But I would really encourage you, just through experience, that if you open up those lines of communications with your bank, broker, accountant, can't solve everybody's issues 100% of the time, but there's a lot that we can do about restructuring, rewriting loans, deferments, those sort of things that may just possibly help. The banks are still open for business. They just obviously largely want to know how you're going to handle the next 6 or 12 months. And I know that's a little bit of crystal ball gazing, but they just want to ensure that you've given it some thought and over a range of different scenarios that may play out. I will say, since I did type this up, this was in part for another presentation. But I will say that there has been, over the last couple of weeks, there has been a sentiment from a number of banks that certainly their communication has been that the appetite for new to bank business has reduced. So what that effectively means is they're happy to still consider and look after their existing clients and requirements and increases and requests, but typically they're being a lot tougher on their assessments for new to bank clients. So and that's only come to fruition over the last sort of couple of weeks from probably 2 or 3 lenders that I know. And the last couple, number 9, I'd really just like to take a minute or two on this one. I'm a big fan of this. It's not all things to everybody, but debtor finance. And this is where, in this environment, I've mentioned it a few times in today's presentation, that your clients will be typically stretching you because they're under pressure, and perhaps their banks might not be supporting them as much as they need, and their clients are stretching them. So instead of typically getting paid in 30 days, it might be 45 or 60, or from 60 to 90 days even. And if you have limited security, if you've got security, probably the best avenue is to go to your bank and ask for an overdraft or an increase. But if you've exhausted your security and you need 50, 100, whatever it might be, 1,000, then look, debtor finance is a terrific facility in not everybody, but in a lot of cases. In simple terms, if you've got $10,000, I'll use a nice round figure for myself. If you've got $10,000 worth of debtors, so the work that you've actually completed and you've invoiced for, instead of waiting those 30, 60, 90 days for that money, once this is in place, and it can be generally set up fairly quickly, you can actually raise up to 80% of that money within 24 to 48 hours. So in that case, it's $8,000. If it's $100,000, you can get $80,000, etc. And the debtor finance will grow with you. So it's a terrific, not only in these tough times, but as your business starts growing, it's a really good facility. Typically, most of the businesses in Australia are mum and dad businesses, and they will erode a lot of their security fairly quickly. So just keep that one in the back of your mind. And last one, number 10, but not least, is please talk to your accountant. They know your situation. Obviously, in this environment, they're one of the agents, I suppose, for the ATO to submit your JobKeeper application amongst a few. So yeah, please keep those communications open. Last couple of slides, just a little bit about us. We're employing 12 staff these days. Obviously, the numbers roughly over 19 years that we've done. We do tend to like to think that we provide old-fashioned service like it used to be, and we're keen to expand as we've got there as well. And obviously we've grown from a broker, not only a broker, now to a consultant or partner there. So and the last thing is just some contact details there, so I'll leave that up there for Pete. But thanks, Pete, for your opportunity to give a talk today.
Okay, thanks very much, Ashley. And we might just bring this back now. We will be placing on the we'll be placing on the website of ESS Small Business your material, Ash. So if people want to access that, they'll be able to do so.
Thanks,
okay, so that will be there and available for you to go to. Now, we seem to be not doing this properly, but so we might do it like that. What I want to now bring you up to date very quickly with is news of what's been going on with the government and the tax office. The tax commissioner has released a statement as to, and it's 94 pages long. If any of you have got some spare time tonight, you can sit down and read it, as to how the JobKeeper predictions are going to be determined, and that's summarised as follows. The ruling says the Commissioner's compliance approach will allow for some tolerance around predictions. This is where you've projected that you're going to have a 30% drop in turnover, or in some cases you have had that, where you're comparing a date in 2019, either March or April, or the months of April, May, June, with equivalents in 2020. There are some alternative calculations. There are 7 of them, and I'd suggest you ask your accountants about them. The big comment is that the Commissioner will accept your assessment of these turnovers unless he has reason to believe that your calculation of your projected turnover was not reasonable. If you're using your accountant to assist you in doing that, I'm sure your accountant's kept appropriate working papers as to how these calculations have been made. If you're doing it yourself, please document where you got the figures from, and you have to retain those for 5 years under the regulations relative to this money being advanced. So you could have the tax office coming and wanting to talk to you about that. The other matter that I want to mention is that the Commissioner has also announced that if your turnover does increase, you will not be penalised on your JobKeeper payment. So as long as you qualify in normal circumstances based on the months of March or April, 19 versus 20, or the months of April, May, June versus 2019 against 20, you're in the system. It doesn't matter what happens in the following month or 3-month period. In fact, the Deputy Commissioner of Taxation has said people can't predict the future. They don't have a crystal ball. Wouldn't it be wonderful if businesses are doing well in that period and didn't have a drop of 30%? They continue to be eligible. I'll repeat, they continue to be eligible. There's even a lot of people expressing concerns about this. You're not going to have the tax office knocking on your door saying, oh, you've gone over what you predicted. That's not a worry at all, as long as you have calculated the original calculations in a reasonable manner. So if you've got any concern, please talk to your accountant, or if you want to send me an email, peter@essbiztools.com.au. The other update I'd want to bring to you is that you can still register for JobKeeper relative to the payments for the month of April up to the 31st of May, but you should have got your team member, your staff person, your employee to have signed the acceptance of the JobKeeper arrangement by the 8th of May. It's very important. You need to keep that on file. You don't send it to the tax office, but you need to have it if they come calling. And I was going to talk to you about something else. What I want to do in the, well, first of all, I should have asked before, if anyone had any questions, can you put them into chat? And I'm just checking again. I haven't got any, but if you want to put questions in the chat. And for those of you who are watching this as a recording later on, because you like getting up at 3 a.m. to watch recordings, and if you do, please do it on your own. And if you've got any questions, don't ring me then, but you can start it after 8 o'clock, thanks, and we'll get back to answering. But in all seriousness, if you've got any questions for Ash or for myself on any matter, or indeed any matters that we've discussed on COVID-19 coronavirus over the last 4 weeks, please send me an email and I will make sure that Ash gets the question, and we will publish the question and the answers on the ESS Small Business website. So I've got no questions. What I want to start with now is giving you an overview of, I think, a very important issue that many people are going to have in business, and that is, what does your accountant do for you? Are you getting value? Is your accountant assisting you to add value to your business? There's some key areas that your accountant can assist you in, and that is obviously in getting all this paperwork sorted out, the loans, applications, if you're going to apply for a coronavirus loans, and Ash has given you a good summary of what they are. If you're going to participate in the JobKeeper scheme, you need to make sure that your employees have signed the form, because they're acknowledging that they're not receiving the JobKeeper payment from anyone else, any other employer they may have. And you need to keep those records. And each month you need to be making a declaration to the tax office that you are paying the JobKeeper payment to the people who have already been nominated. But there's plenty of other areas your accountant can be assisting you, especially in the time frame we're now about to go into. Let me give you a bit of a background. And I don't want to be too pessimistic. I've got to be very careful not to be. There's been articles in the Financial Review over the last 10 days or so that could be termed to be pessimistic. You might be surprised to know that liquidators as an industry are in big strife at present. A lot of them are claiming the JobKeeper payment, according to the Financial Review. Why? Because the government has banned action against company directors or insolvencies for the next 6 months. So it's given all businesses a great opportunity to get your house in order. But please don't wait to the end of September to start thinking about getting your house in order, because it is then open slather for the insolvency practitioners, anyone that you owe money to, if you're behind in your agreement with them. So you've got this window of opportunity when JobKeeper payments are being paid to get your house in order. I would urge you to talk to your accountant and upgrade their responsibility from preparing an annual tax return and an annual set of accounts into being your chief financial officer. Now, they won't be full-time in most cases, unless you're running a very big business, and you're probably not an SME then. But you might need that person's skills for an hour, 2 hours a week to help you get through what I think is going to be a very difficult time. So what the insolvency industry is saying, they probably got to lay off people now, but they're going to need a lot of people come October, November, because they expect insolvencies to increase. The Australian Small Business Association, unfortunately, believes that there will be business failures of 200 to 300,000 businesses. That's a lot of businesses. That's a lot of people, whole life ambitions going down the drain, and it's a lot of employees out of work. So you need to think this through. And none of this is happening at present. Everything's very rosy at present, especially now the JobKeeper payments are started. Things are going to change at the end of September. Now, there's some talk the government might continue things on for a while, but I don't think they can do much more. This is costing our future generations, our kids and our grandkids, a lot of money for this bailout. And sooner or later, the governments are going to have to say there's no more money available. So I wouldn't be relying on it. There might be some funding or continuation of JobKeeper, at the end of September in specific industries that the government still wants closed down. That might be hotels, for argument's sake, which at this stage are really whinging about the 100-person limit. But the other big problem is banks are starting to complain about what their bad debts might be. If you watch any of the not the annual reports, the periodic reports coming out from banks at present, they're all increasing their provision for bad debts, doubtful debts. Now, whilst they're making a provision, they hope that they won't have to utilize those provisions. But if they start getting a string of real bad problems and they can't reclaim their money, do you think they're going to be in a mood to lend to small businesses? And Ash has just said they're playing hardball, tough ball for new people coming to them. I think that's pretty obvious what's going to happen. So I wouldn't be relying, if I was in your situations running a business, that you're just going to be able to wander into your bank manager in November, December and get a loan. If you think you're going to need one, I'd be suggesting you try to get it now, either through the coronavirus SME guarantee loan, the Commonwealth loans, or if you're in Queensland and you get your skates on and you try to get some of the Queensland regional development funding that Ash talked about before, because I think that 500 million will go pretty fast also. The other big issue, someone rang me yesterday and said, oh, well, I'll apply for a grant in November, December. And I said, hang on, I've got my real doubts whether there's going to be many grants around. And we have a business package to help people find grants. I think they're going to be fairly hard to get come November, December, because the banks are spending the money they would normally allocate, I think, for grants, probably over a 2 to 3 year period. They're spending it all now. They're giving it to businesses now. So there's got to be a day of reckoning. The state governments are always pleading that they're broke, and they're pleading with the federal government to get money. And that money tree is running out. So I don't think you can rely on being able to secure large sums of money from banks or from grants later this year, and probably for the next 18 months or so. So what do? You've got a business, you've got a good idea, there's some expansion. I think every business is going to have to be far more aware of the opportunities to raise capital. Now, it means that you're going to allocate some of your shareholding to investors. And there is a process, and it's not gilt-edged either, and there's no guarantees, because you will then be dealing with the public. But there's 3 opportunities for, in fact, there's 4 opportunities for private businesses to be able to raise capital. But one of the first things you've got to do is become a company. So you would have to get your accountant to transfer your business into a company structure so that you can take advantage of the law. Section 708 of the Corporation Act has been there for 34 years. In fact, Paul Keating brought it in when he was Treasurer. I heard his name mentioned before, so I thought, and I do thank him for that legislation. I don't thank him for many other things over his over my career working with businesses. But a private company can raise up to $2 million in 12 months from 20 investors. So bear that in mind. There's no real formalities, but you will need a business plan, a budget, a cash flow forecast, and a vision of where you're going to take the business. People just won't invest money for the sake of it. The second way is crowdsourced funding equity raising. And some of you may have been to some of our other webinars where I've spoken about crowdsourced funding equity raising before. And Ash has had an involvement with crowdsourced funding also in talking to the powers that be. It's got off to a bit of a checkered start in Australia. It's only been running for about 2 and a bit years, 2.25 years. In the first instance, the government said you had to be an unlisted public company. Then they changed their mind some months later, and that disrupted the whole thing. And now we've got this virus. But I think come the end of September, beginning of October, you will find there's a lot of people getting into the act of trying to raise up to $5 million. And don't let that figure scare you off. The average capital raise so far is about $700,000. Some people, 2 or 3, have raised the full 5 million. A few have raised around 3 million. But if all your business needs is $500,000 or $1 million, it is able to be raised. And there is still a lot of money around. Superannuation funds have got a lot of money. And retirees and other individuals have still got a lot of money. What you're going to be able to do is present the case. So you need to work with your accountant, or if you have trouble with that, you can send an email to me or to Ash, and we can give you some advice in that area. And the third way is if you've invented a new product, process, or service, you can utilize the process that's been introduced by the government. And the worst thing when you're doing these things is to have a mental break. With the early stage innovation company, early stage innovation companies is a special capital raising process that's in place to assist young companies who have developed new products, processes, or services. So it's well worth looking at. And there's something in it for the investor in those cases. And the various governments around Australia, especially the Queensland, New South Wales, and Victoria and South Australia, that I know of in particular, have also got agencies that they've established which are looking to invest money into companies. And that's the fourth avenue that is available to be able to raise capital. So talk to your accountant. I think you should be upgrading your accountant status to Chief Financial Officer. You should be getting them to give you advice in your business on an ongoing basis, at least monthly. You should be having a monthly planning meeting with your key leadership team members and your accountant. And your accountant's there not as your tax agent, but as your Chief Financial Officer. If you can't do that, or your accountant's not interested, you need to find someone else who can act as your Chief Financial Officer. If you want some names of people who can do that, because we've got accountant subscribers all over Australia dealing with us, please send me an email and I'll get back to you. Our next webinar in this series is next Wednesday at 12 noon, where we're going to have Paul Barnaby, a predictive accountant. that's some people smile at me when I say that, but that's with all due respect to Paul. Paul is a brilliant accountant. He was the senior partner of a big firm in Wellington, New Zealand for many years. And he's now lived in Australia for the last 15 years or so. And he's also the Australasian representative for Plan Guru, a US company that specializes in preparing budgets, cash flow forecasts, and predicted balance sheet software for accountants and for SMEs to use. Paul's going to do a case study. So he will take 35, 40 minutes to do that case study, which will show you right from the start of a typical small business. I think he's picking a cafe and he's going to work through the full process so you can see on screen the entire process, and we will be uploading to our website, ESS Small Business, the printouts that he produces so that you can see it and appreciate. Because in any of the things we've been talking about, what Ash was talking about of going and talking to a bank, you need budgets, cash flow forecasts, predictive balance sheets. The common words these days is three-way financial forecasts. You need a business plan. I understand the banks are accepting dot point business plans, which basically means 2 pages. You can summarize your business in there, but you probably need a more detailed working paper document back in your office in case you get asked for any more questions. So that's the presentation next week, and I'll make some other comments about how we're going with COVID-19 after Paul has finished. If you have any questions, please send an email. Unfortunately, my slides are not working, so you'll have to write this down. Peter at ESS BIZTOOLS, that's ESSBIZTOOLS.com.au, and we will get back to you. You're most welcome to visit our website, www.esssmallbusiness.com.au, where you can see the various products that we have produced for small businesses and medium-sized enterprises to help you in your business activities. I'm just going to check and see if anyone has sent me a question. And I know no one sent me a question. As I said before, if you can think of any questions later on, or if you're watching this after the live webinar, please send the questions to peter@essbiztools.com.au, and the ones that reply to Ash, I'll forward on to him and get him to answer for us. And any to me, I'll obviously answer, and we'll place the questions and the answers on our website. We won't put your name unless you write on the email you want your name on there. If so, we will. But we'll put the question and the answer so other people can go there. We will have Ash's material on the website in tomorrow. So that's the PowerPoint slides that he showed and that other material. So that if you want to have a good look at it, and then contact him, and his contact details will be there, so you can contact AAA Financial Solutions if you wish. So thank you very much for joining us today. Ash, thank you for your contribution.
Thank you very much, Pete.
And I look forward to talking to you again next Wednesday, when we will add to this story about combating COVID-19 coronavirus. Please stay safe and look after yourself. And good luck with talking to your accountants. And if you've got any issues you want to talk to me about, please contact me. Have a great day. Goodbye.
Thanks, Pete. Bye.
Bye, Ash.